Welcome back to the FT's Banking Revolution Conference. Our next panel will focus on how financial institutions meet the banking needs of different consumer groups. My name is Owen Walker and I am the European banking correspondent at the Financial Times. Before we begin, I would like to remind our audience you can ask questions throughout our panel using the Q&A chat box on your screen. Feel free to share your thoughts on social media using the hashtag Banking Revolution. For this session, I'm delighted to be joined by Joel Lewis, Consumer and Financial Services Policy Manager at Age UK, the charity focused on the needs of older people. I'm also joined by Julia McCall, Commercial Director at Chetwood Financial, a digitally native financial services company. Thank you both for joining me. I'd like to start by asking the pair of you the same question, really, which is, it is quite a provocative one, but do traditional banks take their older customer base for granted in the pursuit of younger customers? So first question to Joel.
Thanks, Owen, and glad to be here this afternoon. We know from official FCA stats that the age group 65 to 74-year-olds are the age group most likely to have switched their main account provider. But that's still only about 42% of people have ever done that. And considering their age, considering they've got to later life and maybe never ever switching their main account, it means there's a great opportunity for financial services to really cater and offer to incentivize people to switch accounts. We know a lot of banks, whether they're traditional banks or even some of the challenger banks, focus a lot of their marketing on being there for the journey, being there for the life course. However, those banks obviously need to ensure that people's loyalty is being rewarded. As much as customers are being incentivized to switch to new account providers, they should be incentivized to stay. So that's around, interest rates on savings accounts, interest rates for credit products. If they're offering you a bundled account, what are the costs of that bundled account? Are the things, the added extras they're offering you as part of that account, do they work well for someone in later life as they do work well for someone in their 20s or 30s or in middle age? Also, is a bank allowing people to access their money and make payments in the way that they know and trust? And obviously, what we want over different stages of their life can be quite different. What we want once we're retired may be very different to middle age due to our levels of income, other financial commitments we have, and also our capability about and our kind of willingness and appetite to manage our money in different ways. Obviously, a lot of older people do switch due to various reasons, and when you look at the stats, it's often due to losing good rates of interest, or seeking to get financial incentives, or often because their bank branches have shut. And obviously, we know that older people might be more likely to rely on use of face-to-face banking services compared to other age groups. So overall, it's really important that essential service providers reward loyalty rather than penalise it. And also think about what works well for different customer groups at different stages in their life as well.
Okay, great. Thank you, Joel. Julia?
Yeah, and I think the loyalty point is really interesting, and that kind of, as you say, that consideration, Joel, over the lifetime. I think the thing that I'm really conscious about is that customers' needs do change, but not necessarily, as we've said, in that linear way. And so, actually, I think the question is, how are those banks responding to changes in their demographics, needs, and behaviours over time? And that, as we've seen, can be not just across the older groups, but actually across even that sort of 35 plus range. And particularly with COVID, etc., we've seen a bunch of changes across a number of age ranges, really down to the environmental factors that were there at the time. And so I guess the question for me is how are those banks kind of staying in tune with that? How are they responding to that, making sure that they are still in touch with their customers? And I think that's as true for the younger generation as it is the older, because we've also seen so many new fintechs coming out. And I think there's an equal challenge for the banks around, whilst they absolutely need to start to fix the switching problem that you outlined, Joel, also think about how are they building their next customer base and what does that look like over the next few generations.
Okay, great. I mean, you mentioned COVID there. I mean, clearly it's had huge implications for, how people use banks, branches. We're using much more online tools, mobile tools, and that's across the generations. But can you talk a little bit about the change in terms of banking services and how they may have changed over the past 18 months or so for the different generations? And Julia, maybe starting with you.
Yeah, absolutely. And I think we all changed the way we lived, didn't we? We all changed the way that we shopped. There were a lot more online purchases. Clearly, shops were shut. We were getting our nan on Zoom and doing family calls in that way, and the whole kind of life, our whole life events changed around the pandemic, and so it's natural then that the way that we manage our money, the way that we were doing our banking, also adapted. We also saw, obviously, in the industry that lending was heavily restricted, both for individuals and for smaller businesses. And that also drove some of that kind of digital adoption, particularly on the kind of open banking side. There was a lot more, I guess, willingness, openness to try some of those tools to give more access to credit, to enable that access. From a retail perspective, clearly we saw things like contactless payments, adoption of Apple and Google Pay, Rocket, as you'd expect. Many businesses drove that themselves. They refused to take cash, and that sort of spiraled into this adoption of services that I think has been really positive, actually, for the industry and for many individuals within it. We actually did some customer research before COVID around contactless and Apple and Google Pay, and what we found was there was a real kind of resistance to change, not just in that older demographic, but actually, anyone kind of over the age of about 28 hadn't necessarily got into that habit and routine of using those payment mechanisms. And so, clearly what we saw with the pandemic was a shift in behavior that then resulted in these kind of new habits forming. And I think as we look at our lives, there's lots of places that we can see that. The digital adoption, and particularly those implications then for financial services firms, was a really strong example of that.
Yeah, absolutely. Joel, any thoughts in terms of digital adoption over the past 18 months that you've seen?
Yeah, sure. We're seeing long-term trends about moves to digital adoption across all age groups, particularly for older people. What we aren't yet certain about is the way in which the pandemic has kind of accelerated those trends, and the way we can draw long-term conclusions about the extent to which the events of the last 18 months or so will have completely changed the way people manage their money. So we're seeing about overall half of all consumers use mobile banking, but that's still a significant amount of people that obviously aren't using the payment method or the channel, the access channel that most people consider the most convenient. So there's still a long way to go in terms of convincing a very significant group of consumers that mobile is the way forward. We're obviously seeing some service providers even get rid of their desktop access version, their web access version, just completely in the favor of mobile. And so those service providers need to consider the needs and the wishes and circumstances of those groups, because we often have a problem where we engage older people on digital issues, and Age UK does a lot of work across the country on digital inclusion and supporting older people to get online. We might say to them, okay, you can access your bank if you go online and visit their website. But then if that channel disappears in favor of them having to use a mobile, them having to use a tablet, something that they have to update with software often, or to update to get a new device every few years because they can't use the old operating system with the new version of the app. That's obviously very frustrating for people that you've told them that this new access channel is going to serve their needs and be a lot more convenient for the way that they access their money. So there obviously has to be meaningful consultation with a diverse range of users and customers about what their payment method preferences would be, what they would prefer. And also, I think it's really important to talk about the range of activities. We often talk about online banking, mobile banking, but that covers obviously a massive range of things that people are prepared to do. So they might want to check their account balance because they can't get a statement sent to them in the post anymore. But do they want to, set up third-party access in that way? Do they want to register a bereavement in that way? Do they want to make international payments in that way? There's obviously a massive range of things that sometimes we need to do on a more day-to-day or month-to-month basis, and other things are much more one-off, but we'd still much prefer to speak to someone face-to-face to be able to do that.
Yeah, and you mentioned that the work that Age UK does in terms of education, digital inclusion, but are the financial institutions, are the banks doing enough in this area? Joel, first with you.
we have a lot of partners in the banking sector. We work with like Santander and others on this sort of activity and supporting people during kind of different and sometimes severe kind of life events. So whether that to do with retirement or bereavement, and other events that can be kind of really complicated in how people deal with their money. There's obviously a big issue with older people and who manages the money in the household. If your partner, if they unfortunately pass away or they're incapacitated in some way, maybe they move into care or move into hospital, you're now responsible for managing money in the household, but yet you may have never done that throughout your entire kind of adult life. And that's obviously, to be a novice in some of these essential activities, could be obviously really, it creates a risk of a lot of mistakes potentially happening and people just not getting the best deal and getting the best service. What we would say in terms of our principles and how we support people to get online is it's always got to be person-centered. You've got to find out the reasons why an older person might want to get online or increase the range of their online activities, rather than just say to them, oh, did you realise you can do X or Y? So do they want to speak with their grandson in Australia? Do they want to manage their money online? Do they want to do shopping or stream stuff on Netflix, or whatever it may be? It's really important to base supporting them to be on that journey for the reasons they want to get online. And so I'd say the same thing to financial services as well, as in find out from your customers what's the main reason they'd want to get online to manage their money. Is it because of convenience? Is it because of access? Because they don't have access to a local branch? What kind of activities do they want to do on a day-to-day basis? And how can you support them to do that in the most convenient way possible?
Yeah. Yeah, Julio, I saw you nodding away there. That's something that you're clearly from your business, which is digital only. That is that the sort of outreach you've been doing? Is these the sort of lessons you've been taking?
I think to some extent it's easier for us because we are digital only and we've been really clear and transparent about that from the outset. So we're almost self-selecting those customers who are prepared to manage their money digitally from the outset, which makes it easier than a Lloyd's or a Santander trying to kind of migrate big chunks of their base. But I 100% agree with the kind of customer research centric approach, which is go out and talk to your customers, and within those customer groups of all age types, there will be huge differences in the reasons, the likelihood, the reasons that, for the resistance against actually moving to some of these methods, and you really need to understand those so that you can overcome it. There are definitely segments out there who it is just inertia. They're not sure about it, they're not bothered about it, they don't necessarily understand the benefits of it. So can you make that clearer, simpler? Actually, is it about having people in branch helping to educate and show and really demonstrate how these things work? Equally, there will be segments in there who have much deeper concerns about the fraud, the security angles. They may need a different approach. And actually, some of them may never want to migrate over, and that's kind of something that the big banks need to kind of manage too, clearly. But I think the key for me is making it as simple and straightforward, and starting to really understand what the drivers are that are preventing it. Because once you understand them, they can be relatively simple actually to overcome. And certainly, we found that in our research that even the perceptions around mobile wallet payments, people were very, some of the rationale for it was not thought through. And even within the research session, they were starting to get into a different space about actually it probably is more secure than having contactless on a card because of Face ID. And even within that group, they were sort of self-educating one another. And so it doesn't have to be, I don't think, a very complex education program. Sometimes it really is just about bringing it to life. I also think the press, there is a role for the press around some of those messages. We often cling to open banking is scary and it's sharing your data, and contactless, again, there's that kind of tendency to go for the kind of the scary side of it, and perhaps some of that actually does put off a chunk of customers who might otherwise have been open to it. So I guess there's some balance there that could be brought out as well.
Yeah. Joel, is there a danger when if banks start thinking of their customers in different sort of segments in terms of their age profiles, perhaps drawing on stereotypes of these people? Could that lead to maybe patronizing or even certainly oversimplistic ways of dealing with clients, which will ultimately mean they don't meet their needs? Is there a danger of that happening?
Definitely. I mean, there's 12 million older people in the UK. About 1 in 5 of us at the moment are over the age of 65. Within 20 years, about 1 in 4 of us will be over 65. So that's a massive group of people, very diverse kind of needs and backgrounds and circumstances and wishes and everything like that. So there's a real danger of automatically equating age with vulnerability. And that's something that we never want to do as an organization. That would say to partners we work with and organizations we work with, age doesn't mean you're vulnerable. What we would say, the nuance we would say, is that age increases your exposure to vulnerable circumstances. So it increases your exposure to maybe poor health, to a lack of capability because you're not used to using online services, to reduced income because you're retired now and you're not earning. And then obviously, what are the harms that could result as a result of those vulnerable circumstances? So could it be exposure to fraud and scams, to lack of access, to not getting the best deal? So these are the kind of things we think service providers and regulators and government need to think about in terms of ensuring they serve people well. And obviously, as an organization, we are a campaigning organization, and we do, our focus is often more on those people that need us the most. So sometimes that can get muddied with us, and we can often think more about the vulnerable older people rather than just thinking about older people as an entire kind of age segment. But that's just the kind of work that we want to do in terms of where we feel we can add the most value to supporting older people ourselves.
Yeah. Yeah. Julie, can you maybe provide some insight into how you go about designing products for certain segments of customers? And, we don't need to say this is a product for an over 65-year-old, but, but how do you go about that? What's your process there?
Yeah, and I think it fits perfectly with what Joel just said in terms of recognizing the size of these segments and as a result how diverse those customer groups will be. So because at Checkwood we do take a very customer-centric approach in terms of our product development, everything is very much, it starts actually with that specific target market in mind. We build customer personas. Age is a factor within those, but it is absolutely not the determining factor. We look at, we're much more focused actually on those needs based, the kind of current experiences, pain points, wishes, aspirations. And we use those to really create a really clear view of the target market and of the different segments within the market that we're looking to build a product around. We then test everything. So we take everything from the brand name, the brand look and feel, every line of copy, every journey design, every product feature through rounds of research. And we create these really friendly, informal groups where we talk to our target market and really draw out and kind of co-create effectively the product and the overall proposition with that group. And that allows us to get into all sorts of kind of real life examples, I guess, of things that don't necessarily fit those stereotypes. Whether that's when we launched our Smart Save product and we were starting to do the early research, there were a fair number of people who sort of imagined that we would need to have a phone number as an example. So today we are purely digital. We'll call customers back at their request, and particularly, as Joel said, clearly if we have vulnerable customers, that is something that we're always conscious of. But actually, for savings, having launched our first lending brand, there was a view that we would have to have a phone number in order to bring deposits in. That customers, frankly, in that age range, wouldn't be comfortable to deposit without it. And when we did the research, that absolutely wasn't true. And so, we use that kind of real customer examples, I guess, to break down those stereotypes and make sure that when we're making product decisions, it is based actually on what our customers want and not what we might think they would want, or what a group of people who've worked in a different organization know that their customers wanted. It's actually about being really sure about exactly what that market needs. And I think that's what's interesting about that for me, is that obviously does change over time. So the customers that you have today, won't necessarily have the same needs or aspirations in 5-10 years time. And as the technology changes, even the younger generations will feel out of touch actually with the latest thing and the kind of the newest thing to arrive. So there is a kind of an ongoing education piece, I think, for all age ranges around how some of those developments can benefit people and actually help them manage their money better, which is what we're all trying to do at the end of the day.
Yeah, absolutely. Joel, you mentioned earlier about the the vulnerability of older people, or it increases their vulnerability. Can you talk about what can be done to prevent fraud, prevent scams, which may target older people in particular? What can financial services companies be doing more to reduce that risk?
Well, like the industry, this is a big concern for in my work and for Age UK as an organisation. We provide projects around, we run projects around the country to support victims of scams and try and prevent fraud and abuse from taking place in the first place. Obviously, there's lots of developments. There's a very fast-moving situation at the moment. We've got the payment systems regulator about to announce its decision, what should happen to victims of authorised push payment fraud. We and other charities and consumer groups are calling for more mandatory reimbursement of that type of fraud, owing to the fact that it's not the fault of victims that they're losing money to these criminals. It's often the fault in product design and service, and the friction that is kind of embedded within payment journeys. I think we've all got used to making faster payments. We've all got used to seamless, transfer of money, and that's brought so many benefits to a wide range of consumers. But I think it's really important if service providers could also provide controls to users as well, and to let them know whether those sort of faster payments are something that they want to do. Do they want some restrictions on those payments, delays to how they go out, restrictions in certain payment channels, or the amount of money that's sent out on a certain day? Would they potentially like a third party to be notified of when they're making certain payments? These are the kind of things that could potentially help reduce, obviously, the massive volume and increasing volume of fraud and abuse, fraud and scams that are taking place. It's not an easy one. We obviously, like a lot of the financial services industry, would like the government to include fraud and online advertising within the scope of the Online Safety Bill, which is currently in legislative scrutiny before Parliament. We believe that's a massive missed opportunity if you've got a legislative vehicle for addressing the absolutely massive scale of fraud taking place online, and you're not holding tech companies' feet to the fire in terms of how those kind of fraudulent ads can spread on their site and really target a massive range of people.
Yeah, absolutely. Julie, I don't know if you have any thoughts there on anything that you guys do, or anything that you've seen which is particularly effective in the industry when it comes to fighting against fraud and scams.
Yeah, I think it is just awareness, and I think it's that constant awareness of, as you say, Joel, it changes so quickly, and the landscape. There's always new versions of it. There's always new scams, and so how do we effectively get that out to consumers, to prepare them and to make sure that they're making the right choices when they come into those situations. I think there is a lot that the big banks can do. I know that many firms like ClearScore and Totally Money, who are trying to help people manage their finances better, are also thinking about how they help from a fraud perspective, whether that's highlighting when there have been searches on their credit reports, which obviously can be an indicator that someone is actually applying for credit in your name. But many of them now have services, some of which are free, and are actually just kind of value add services that consumers can take to, I guess, to your point, Joel, try and give them a few more of those kind of real-time alerts and notifications to help them manage it. I think that's a big step forward. It is a societal issue as opposed to just a kind of a banking issue, I think. And I think that because it's so dynamic, it will need lots of focus from lots of people to really address it. I think there have been some, even as a consumer, I've seen over the last 12 months, a lot more focus coming out from a range of organisations on fraud, with very practical tips and sort of very obvious but helpful advice. And I think even that has changed quite dramatically in terms of how people are approaching it. So it does feel like it's starting to get a bit more traction across the industry as well, which I think can only be a good thing.
Yeah, absolutely. We have a question from the audience, and it's quite a broad one, but it's maybe something you haven't necessarily tackled so far. What are the financial institutions doing for younger and up and coming generations? And I suppose we've talked a lot about what they can be doing for older generations, certainly around education and in fraud prevention. But Julia, I don't know if you have any thoughts on similar for younger generations.
Yeah, and I
People
think
who aren't as financially savvy. Yeah.
yeah, I think, well, there's a whole host of new companies out there, isn't there? And I guess fintechs and also just tech firms, not necessarily all financial based. I think, people like ClearScore, Totally Money, I think actually are adding a nice lens to that younger consumer in terms of, when we do a lot of research, we kind of speak to people who made the mistakes as a person in their 20s because they weren't told at school and they didn't have family role models from a financial perspective to look up to, and so they made a bunch of mistakes like not paying their mobile phone bill or missing payments here, there and everywhere, and they didn't realize what impact that would have on their credit score and on their ability to kind of access broader credit services over time. And so I think there are new partners in the market out there trying to help people with that kind of educational piece from an earlier age, which is positive. There's clearly more choice in the market. So, there are lots of new people out there to choose from a banking perspective, which I think is hugely great from a competition perspective. It keeps us all on our toes and kind of pushes financial services forward, which I think is good. And I guess, the interesting thing for me is that from a big bank perspective, the traditional banks, there is a kind of how will they be able to adapt for that target market? And even if you take the example of setting up online banking, many of those organizations still require you to set up telephony first. And people that are 20 don't want telephone banking, right, in the main. And that's, again, a generalization, but in the main, those that we've spoken to certainly have said, I just want to download the app and I want to crack on. And actually there's some kind of legacy system sort of architecture, I guess, going on in terms of the flow in which those customers come through. And I think those next generations, they're not going to settle for that. They're not going to put up with that. Their expectations are so much higher from a digital perspective. Again, not from a banking perspective, but because of those digital companies that they're using in their day-to-day lives, that they'll expect the bar to be higher. So for me, I think what we're starting to see is really going to shift where future generations are in terms of what they expect and what they're willing to put up with.
Yeah, absolutely. We're coming very close to the end of our session. It's actually really flown by. I just wanted to sort of round off by asking the pair of you, just sort of cast your mind forward 10 years and whether you expect us still to have traditional bank and building society branches and if so, or if not, what that might mean for consumers and the way we think about banking, whether it's just much more a mobile service that we use. Big question, but not much time to answer it in. But maybe Joel, if you can kick us off with some thoughts.
Well, we believe that unless government acts, we won't have the same network of banks and building societies in the next 10 years. The government have recently concluded their consultation on access to cash. And it's great that it looks like 90% of neighbourhoods will have access to a free source of cash within a kilometre. It's not going to serve all the needs of people across the country that rely on cash, but we think it's a good start, particularly if we can guarantee that access to cash and work with industry and regulators to build on that and ensure that those that need it the most can access that payment method. But what we felt was a massive exclusion from the scope of that consultation was looking at access to face-to-face services. And we are seeing good innovation across the industry. We are seeing the likes of banking hubs, shared banking hubs, franchises run by building societies and shops and other premises. We've seen mobile branches in the past. But we know obviously the long-term trends here are shutting more and more banks, bank branches and building societies. And I think that's really unfortunate for a lot of people. I think a lot of people need to access money in the community. I think that's bad for local businesses and the recovery of high streets up and down the country trying to recover after 18 months or so of lockdowns. And so we really need to think the government needs to act. And we for the post office, for instance, there are access requirements saying that this amount of people need to live within so many distance from the post office. We believe the government should really look at setting requirements like that for access to face-to-face banking services, and some sort of maybe independent body could be coordinated by the industry to look at where these cold spots are, to look at where the need for services is, and make sure that communities across the country can really continues to engage with their money.
Sure. Yeah. And Julia, final thoughts from you.
I think they will still be there in 10 years. I don't think they will be in 50 years or maybe 25 years, but I think in 10 years, probably. I think, we're not seeing a a rapid reduction in the kind of traditional banks in terms of even moving from paperless to online communications. So, and I think that's probably right in terms of serving that broader customer base.
Yeah. Okay. Well, thank you very much for getting out your crystal balls for me, but also for really interesting and wide-ranging discussion. So thanks very much for your time, Joel and Julia. I would like to also thank our audience for your questions, and to remind you that the session will be available on demand on the event website for the next 30 days. Please stay tuned for the next session, which is a panel on the role of fintechs in funding a sustainable ESG-friendly economic recovery, moderated by Imani Moyes, the FT's US banking correspondent. But for now, it's goodbye from me, and thank you very much.